Florida's condo market is collapsing, and fast. Once hailed as symbols of affordable beachside living, these units are now transforming into financial nightmares for countless owners and would-be buyers. HOA dues have violently exploded, with some owners now paying over $2,000 a month on top of staggering special assessments of $50,000 or more just to keep aging buildings from crumbling. Insurance rates have brutally doubled. Buyers are vanishing, and entire buildings are being blacklisted by cautious lenders who refuse to touch them. Condos that sold for $250,000 in 2022 are now tragically worth under $150,000. From Miami to Deltona, the collapse is widespread, and it's only getting worse. This isn't just a market dip, it's a full-on unraveling. In this critical video, we're exposing Florida's condo market, revealing how it's falling apart under the crushing, unbearable weight of rising costs and a pervasive lack of demand. Before we jump into our number 10 spot, if you're finding this information helpful in your journey to discover the nation, consider hitting that subscribe button. It helps us bring you more crucial content like this.
Number 10. Homestead. Situated in the southernmost reaches of Miami-Dade County, Homestead rapidly grew as a perceived affordable entry point to the sprawling South Florida market, attracting families and service members. Its housing market soared, reflecting immense desirability for those priced out of Miami's core. But in 2025, Homestead's expanded housing market is flashing critical warning signs, and if economic conditions worsen, it could face a severe 2008-style collapse, with home values potentially dropping by 15 to 20%. Homestead's explosive growth was overwhelmingly driven by its relative affordability, its military presence, Homestead Air Reserve Base, and agricultural industries. This led to substantial price appreciation, with median home prices peaking around $420,000 in 2022. However, this growth has now collided with a brutal reality. More critically, Florida's escalating and crippling property insurance crisis has hit Homestead particularly hard. Annual insurance premiums for homeowners here can easily soar into the $7,000 to $10,000 plus range, even for modest homes, turning what was once affordable into an unbearable burden. With current 7% mortgage rates, a $350,000 home now costs over $2,300 per month in principal and interest alone. Inventory has already surged, up 30% year over year, and homes are sitting longer, average 80 days. In a true meltdown scenario, this surplus, combined with the crushing insurance burden, would overwhelm reduced demand, leading to widespread price reductions and a painful erosion of equity, reminiscent of the widespread financial devastation seen in 2008.
Number 9. Jacksonville. The largest city by land area in the continental U.S., it saw massive housing gains between 2020 and 2022. But in 2025, the story has dramatically shifted from relentless boom to a chilling, undeniable slowdown. The median home price in Jacksonville has dropped from its mid-2022 high of $410,000 to around $357,000, representing a brutal fall of $53,000 or nearly 13%. What's relentlessly causing this sharp downturn? It's a devastating mix of higher borrowing costs, pervasive overbuilding, and a dramatic, unprecedented rise in housing inventory. In 2021, Jacksonville had fewer than 4,500 active listings. Today, that number has horrifyingly approached 9,000, representing an increase of over 100%. Homes that used to vanish within 10 days now painfully linger for 40 to 60 days, and many desperate sellers are cutting prices or offering significant cash toward closing just to attract any buyers. The overwhelming oversupply, particularly in fast-growing suburbs like Middleburg and Oakleaf, is mercilessly putting downward pressure on prices across the entire metro area. Homeowners now pay an average of $4,200 annually for coverage, a brutal leap from just $2,100 in 2021. Property taxes have also climbed relentlessly as assessments catch up with the pandemic-era price hikes, pushing average tax bills to around $3,800. The affordability crisis is deepening,
At a 7% mortgage rate, a $357,000 home now commands a monthly payment over $2,500 for principal and interest. That's a monumental leap for a city where the median household income sits around $63,000. Rising inventory, crushing affordability pressures, and relentlessly costly overhead are reshaping what was once a pandemic-era housing winner into a cautionary tale.
Number 8. Port St. Lucie. This city has long been celebrated as one of Florida's most appealing family-friendly destinations. Safe, clean, and growing at an incredible pace. So fast, in fact, that home prices exploded to $405,100 in 2022. But now, in 2025, we're seeing those prices slide back down to $375,513, a $29,497 drop, or just over 7%. On the surface, this might not seem catastrophic, but dig a little deeper and the cracks are showing fast. The first major issue is collapsing buyer demand. Interest from out-of-state buyers, which significantly fueled much of Port St. Lucie's pandemic-era boom, has all but dried up. With higher mortgage rates and fewer people relocating, the once red-hot bidding wars are a distant memory. Now, sellers are forced to offer concessions, rate buydowns, and aggressive price cuts just to get a showing. There's also a pervasive pending sales collapse. Last year, nearly 1 in 3 pending sales in the city fell through, whether due to financing problems, low appraisals, or simply cold feet from buyers. Then there's the surging HOA fees. Many neighborhoods here, particularly newer developments, saw their HOA costs rise dramatically to cover soaring insurance, maintenance, and storm-related upgrades. In some communities, fees jumped from $80 to $200 a month, and residents are feeling a severe pinch. While homes are still selling, they're taking significantly longer. Days on market has increased from about 24 days in 2022 to over 65 days in 2025. That might not sound like much, but in real estate, that's a blinking warning light. Port St. Lucie isn't in free fall, but it's slowing fast. The demand engine that once drove growth here is stalling, and unless interest rates fall or local job growth spikes, this could be the start of a much steeper slide.
Number 7. Tampa. This city was once the rock star of Florida's real estate scene, fast-growing, full of jobs, and absolutely booming in the early 2020s. Its rapid ascent, fueled by an intoxicating mix of genuine growth and heavy investment, marked it as a significant early flashpoint where a dangerous housing bubble began to dangerously inflate. Between 2021 and 2022, this Gulf Coast hotspot became a magnet for remote workers, retirees, and, crucially, Wall Street-backed investors chasing sunshine and profits. This insatiable demand pushed average home prices to $383,410 in 2022, creating unsustainable price appreciation that far outpaced local wage growth. The frenzied bidding wars were a clear symptom of the bubble's formation. If you're finding this crucial information for understanding Florida's market shifts, please gently hit that subscribe button to discover the nation. Your support powers our in-depth investigations. But in 2025, that glow has faded fast. Prices have dipped to $360,130. The red flag waving hardest is exploding housing inventory, up more than 55% since last year. Homes that once sold in under 2 weeks are now sitting for 75 to 90 days. The short-term rental market is crushed, with thousands of Airbnb landlords flooding the resale market. And then there's the critical issue of buyer financing, with mortgage rates hovering around 7.5%, pricing out buyers. Tampa's aggressive growth, once its strength, has left it with overvaluation and oversupply, the very hallmarks of a bubble now beginning to burst. If current trends persist, a significant correction is absolutely on the table, threatening widespread financial devastation.
Number 6. Sarasota. Skidding into our number 6 spot, Sarasota. Known for its white sand beaches, vibrant art scene, and a sophisticated retiree population, Sarasota became a prime magnet for high-end investment and second home purchases. Its rapid price appreciation and overvaluation, fueled by affluent buyers, marked it as a key flashpoint where Florida's housing bubble truly began to inflate in the luxury segment. Sarasota's market overheated rapidly, driven by out-of-state wealth seeking paradise and speculative gains. It was labeled one of the most overvalued metros in Florida, peaking at 38% over fair market value in 2022. This aggressive upward trajectory, detached from local economic fundamentals, was the clear symptom of the bubble's formation. Now, the balloon has popped. Inventory has soared to levels not seen since 2015, with over 3,700 homes listed for sale, putting serious pressure on prices. Homes that were once fetching $1.2 million are now struggling to move at $975,000, representing a colossal 18.75% drop and signaling widespread financial distress. Buyers are tightening wallets, and mortgage rates topping 6.75% mean the luxury home crowd is getting pickier or disappearing. Add in crippling insurance premiums, $8,000 to $10,000 plus annually for waterfront homes, and the true cost of ownership is unbearable. Sarasota's market, once riding high on speculative luxury, is now in painful correction, its overvaluation a stark reminder of where the bubble truly took hold. This market's current state highlights the extreme vulnerability of high-end, amenity-driven areas to rising costs and shifts in global wealth, making it one of Florida's fastest collapsing markets.
Number 5. Fort Lauderdale. This city, celebrated as the Venice of America with its stunning beaches, intricate canals, and world-class yachting industry, grew at an incredible pace, epitomizing the luxury coastal boom that significantly contributed to Florida's broader housing bubble. Its rapid press explosion, fueled by high-net-worth migration and investment, was an early warning sign of truly unsustainable growth. Fort Lauderdale's boom was overwhelmingly driven by wealthy out-of-state and international buyers, foreign investors, and remote workers chasing an aspirational lifestyle and perceived exclusive value. Home prices exploded to a median of $680,000 in 2022, utterly detaching from local incomes and fundamental value. This created a strong pull for developers to rapidly expand, pushing ever higher with luxury condos and beachfront properties. If you're finding this crucial information for understanding Florida's market risks, please gently hit that subscribe button to discover the nation. Your support powers our in-depth investigations. Now, the engine is stalling. Buyer demand from even affluent out-of-state and international sources has significantly cooled. Inventory, particularly in the luxury condo and waterfront segments, is spiking. Prices are sliding back down to an estimated $555,000, a $125,000 drop, or nearly 18.4% from its peak. This coastal paradise was simply never meant to sustain such inflated valuations, and the financial foundation is cracking, a direct result of the bubble's expansion. The skyrocketing coastal insurance costs, driven by increasing hurricane risks, now often top $10,000 to $15,000 annually, adding immense pain for homeowners. Fort Lauderdale's rapid, speculation-driven growth was a clear symptom of the bubble's beginning, and it's now experiencing a hard reset that's hitting hard at the high end, making it a critical market to watch for further declines.
Number 4. Orlando. Orlando, the land of theme parks and sunshine dreams, is suddenly waking up to a sobering, inescapable housing market reality. Between 2020 and 2022, Orlando's median home price soared from $280,000 to $415,000, a jaw-dropping 48% increase. But in 2025, that magic bubble is grimly deflating. Median prices now sit around $375,000, a $40,000 dip or nearly 10% from the peak. And analysts grimly warn the slide may not be over. Part of Orlando's problem is catastrophic overbuilding. The city recklessly issued over 17,000 residential permits in 2021 to 2022 alone. Now, many of those newly constructed homes are tragically flooding the market. Active listings have ballooned from 4,200 to over 9,000 in just 24 months, an alarming surge.
Days on market have more than doubled from 18 days in 2022 to over 45 days in 2025. Sellers are desperately offering mortgage rate buydowns, closing cost coverage, and even theme park passes just to stand out in a flooded market. Interest rates around 7% have brutally hammered affordability. A $375,000 home now commands monthly payments around $2,500 for principal and interest, a brutal leap from $1,500 just a few years ago. Property taxes now average over $4,200 per year, and insurance premiums, especially in hurricane-prone zones, have climbed past $5,000 annually, adding immense financial strain. Orlando's rental market is also conspicuously losing steam. Monthly rents have dropped from $2,250 in early 2023 to about $1,975 in mid-2025, a 12% decline. For now, Orlando still shines for tourists. But for homeowners and landlords, the city's real estate market is revealing some very real and painful cracks behind the magic.
Number 3. Fort Myers. Fort Myers, once the undeniable epicenter of Florida's pandemic-era housing boom, has now brutally emerged as one of the fastest collapsing housing markets in the state. Back in 2021, the median home price surged to a staggering $425,000, a monumental leap from $270,000 just 2 years earlier, representing a jaw-dropping 57% increase. But in 2025, that reckless gold rush has come to a grinding, painful halt. Prices have dropped to around $367,000, a $58,000 correction, or about 13.6%. For a city built on seasonal demand, that's a serious red flag, signaling widespread financial distress. Housing inventory has exploded. In early 2022, there were fewer than 1,500 active listings. Today, the number is horrifyingly over 3,800, more than doubling in just 3 short years. Builders tragically overestimated post-pandemic demand and flooded the market with new homes, many of which now sit unsold for months. Days on market have tripled from 20 days in 2021 to nearly 65 days in mid-2025. Sellers are frequently dropping prices by $20,000 to $50,000 and offering desperate incentives like free appliances or costly interest rate buydowns. One major blow: insurance. The average homeowner now pays over $6,200 per year, up from just $2,800 in 2020. Hurricane Ian's devastating legacy still haunts the region, pushing up premiums and actively pushing out buyers who fear climate volatility. With mortgage rates hovering around 7%, buyers who once paid $1,800 a month for a $350,000 home are now shelling out over $2,600, a brutal 44% increase. And with median household income in Fort Myers sitting just under $60,000, many locals simply can't keep up. Fort Myers is still sunny, but the real estate outlook is now profoundly cloudy with a high chance of further declines.
Number 2. Naples. Synonymous with opulent beachfront condos, high net worth residents, and some of the priciest real estate in the nation, Naples was a prime suspect in Florida's pandemic-era housing frenzy. Its condo market, in particular, saw meteoric gains, fueled by an influx of wealthy buyers seeking sunshine and investment opportunities. But in 2025, the tide has brutally turned, and the ultra-luxury condo market in Naples is showing alarming signs of a significant and painful correction. Between 2020 and 2022, median condo prices in Naples surged by an astonishing 60%, with many high-end units trading for millions above their previous values. This rapid appreciation, often detached from fundamental economic realities, screamed bubble. Now the air is hissing out fast. Condo inventory has more than doubled in the past year, and the once fiercely competitive market has gone ice cold. Days on market have stretched from a mere 25 days to over 110 days, and a staggering 40% of current listings have undergone significant price reductions, some exceeding $100,000 or more. Firstly, the relentless surge in coastal insurance premiums has disproportionately impacted high-value waterfront condos, with annual costs now routinely exceeding $15,000 to $25,000, making the sheer cost of ownership prohibitive for even affluent buyers. Secondly, the increasing threat of hurricane activity and rising sea levels is injecting a new layer of risk and uncertainty into the minds of potential buyers.
Thirdly, the crackdown on short-term rentals in many Naples communities has severely curtailed investor interest. Finally, and perhaps most critically, the overvaluation in the Naples condo market had simply reached unsustainable levels. The high-end condo market in Naples, once a symbol of Florida's booming real estate, is now facing a harsh reckoning, and its dramatic slowdown serves as a stark warning for other overinflated coastal markets.
Number 1. Northport. Northport has tragically taken the unfortunate crown as Florida's most rapidly collapsing housing market in 2025. Located in Sarasota County, this city saw some of the most explosive growth during the pandemic. In 2020, the median home price was just $260,000. By mid-2022, it soared to an eye-watering $450,000, a monumental 73% jump. But that reckless boom has turned into an undeniable bust, signaling widespread devastation. As of 2025, the median home price in Northport has plummeted to just $377,000, representing a staggering $73,000 drop, or 16.2%, making it the biggest year-over-year decline in the state. Why this devastating crash? Overbuilding is a key culprit. From 2021 to 2023, developers foolishly flooded the market with thousands of new single-family homes, expecting demand to remain red-hot. Instead, inventory exploded. Active listings have skyrocketed from under 900 in early 2022 to over 2,300 in mid-2025, up 156%. Homes that once sold in 7 days now painfully linger for 70 or more. New builds are now routinely discounted by $40,000 to $60,000, and builders are even covering closing costs to avoid further price slashing. Affordability has utterly cratered, with interest rates around 7%. A $377,000 mortgage now demands nearly $2,650 per month, up from $1,500 per month at pandemic-era rates, a brutal increase. Insurance premiums have also surged from about $2,200 in 2020 to more than $5,800 in 2025, thanks to heightened hurricane risk and remapping of flood zones. Add in $4,200 in property taxes, and Northport's once affordable dream is actively breaking household budgets. Once seen as Florida's next big boomtown, it's now ground zero for the state's housing market correction. If any city shows how fast fortunes can change and how devastating a collapse can be, it's Northport.
The message is clear. Florida's real estate landscape is shifting dramatically. Stay informed, stay vigilant. Its beaches still call. Its skies are still blue, but beneath the sunshine, the cracks are showing, especially in the housing market. From Lakeland to Cape Coral, from once booming suburbs to fast-growing cities, buyers are waking up to a new reality. The same homes that soared in price just 2 years ago are now sinking. This isn't just a slowdown, it's a reckoning. Overbuilding, inflated pricing, sky-high insurance, and shaky rental returns have left many Floridians and hopeful newcomers holding the bag. And in some cities, that bag is full of falling equity and rising regret. The American dream didn't disappear here, but it did get distorted. So if you're looking to buy in Florida, be cautious, be informed, be strategic. Not every palm tree hides a paradise. Some are planted in markets that won't recover for years. Don't forget to like this video, share it with anyone who needs to see this vital information, and of course, hit that subscribe button for more in-depth analyses from Discover the Nation. We'll see you in the next video, because sometimes knowing where not to buy can be the best investment decision of all.